Recently, there has been some good news, which is not that good, but the important thing is that the bad news doesn't seem to be that bad anymore. It seems like the economy is getting back into some kind of balance. There are some indicators suggesting that deflationary pressures are easing a little bit, that industrial activity is picking up, consumers are beginning to get back to consuming, but the underlying problems still remain. China, as you correctly pointed out, needs to transition to a higher productivity, higher technology-oriented economy, and the question is whether the financial system, government policies more broadly, are pushing the economy in that direction, because the reality is that China cannot grow by investing as it has for many years. The labor force is already shrinking, so productivity growth is going to be crucial. That requires a better financial system to channel resources in the right direction, but it also needs a better policy framework, and that's the real challenge for China right now.
So what's holding back Chinese officials when you talk about financial regulation in terms of coming out with some of those steps and signaling to the market and the economy that they are making those adjustments and taking those steps to improve things?
The good thing is that Chinese officials seem to know exactly where they want to go, but the question is whether the government is willing to accept that market-oriented forces need to play a bigger role in the economy. Under Xi Jinping right now, there seems to be a shift towards a command-driven economy as in the past, with the private sector being tolerated rather than encouraged. On my last trips to Shanghai, I got the sense that entrepreneurs, property developers, and many people in the private sector are very concerned about government policies, whether they're going to be as conducive to private sector development as they were in the past. And this is going to require not just better macroeconomic policies, but also a better institutional framework, better corporate governance, better auditing and accounting standards. So this is true for the economy more broadly, but especially for the financial sector.
And one person who may give us a good steer on the future of China's economy moving forward is Premier Li Qiang this morning. What are you hoping to hear from that speech? Because last year it seemed like he still left the markets hanging in terms of strong signals and reassurances. So what language are you looking out for today?
I think that speech is going to be a very important one because it'll give us indications about what the government is going to do to support short-term growth, but more importantly, what it is going to do to tackle the underlying structural problems in the economy. The real estate sector is still floundering, and that is a very important part of the economy. So the question is what replaces the real estate sector, especially investment in the real estate sector as a driver of growth. What is the government going to do about fiscal policy, and not just in terms of supporting domestic consumption right now, but in terms of reorienting fiscal policy so that it can better support growth? What is the government going to do in terms of encouraging the private sector? Because it really needs the private sector. Small enterprises are very important for employment growth. The larger enterprises are very important for innovation and productivity growth. So all of these are really crucial marks that we will have to wait and look for in Li Qiang's speech.